Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. Side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot. There's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people. And all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
For the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know.
AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college, and there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so it's probably a number of things, but it's probably a factor. Hard to say how big it is. At the time of the July meeting, if the labor market was in solid condition, and we could point to 150,000 jobs per month, and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then. But I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted, and so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts, and some didn't, as you will see from the dot plot. So that's just the way it is.
Is a possible outcome here that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation?
It's certainly possible. We have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And it's also possible and that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply.
Cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening, or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off, and that tells you that it's time to take that into account in our in our policy.
So just looking at the SEP once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
15, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But no one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Welcome to the Cryptoteacher. Don't forget to like and subscribe to the channel. And I come back with that video just to make you think. And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Fed Jerome Powell in the house today. 25 basis point cut. And then he gives us some truth. Admits the economy is on a downturn. Also, the labor market is taking a beating. And this 25 basis point cut, as we know, guys, is already priced in. I do see us chopping around, pumping and dumping in the same area that we are when it comes to stocks. Cryptos, of course, we know when we pump or dump. And then plus we have the catalyst of the spot crypto ETFs. But when it comes to Fed rate cuts, are we going to pump off that? No, we're definitely not. Now, Fed Jerome Powell, he would have got a B+ on this until he stated we don't have enough housing. Yes, guys, you heard that correct. Not that pricing is too high. And when we know when it comes to inventory levels, we have a whole lot of properties that are just sitting. And remember, the Cryptoteacher told you. He act like we don't drive around, guys. It is unbelievable. You can't make this stuff up. And he didn't even have to say it. And then he's asked about the revisions. That's right, guys. Over 50% of jobs revised. Where did the jobs come from? Where did they go? 900,000 that wasn't there. Yes, guys, remember, you're living in a movie. And unemployment rate is never correct anyway. Remember, once you drop out of the system, you're not even counted. And then we have Jerome Powell on AI. And don't forget, Jerome Powell told us back in 2021 that this technology can replace the people. Yes, guys, you can't make this stuff up. He knows for a fact what all this technology is for because he told us a long time ago. But unfortunately, the sheep stay asleep. They stay focused on things that don't matter. You can't make it up. And then we have Jerome Powell says that inflation is definitely picking up due to tariffs. And we're going to see even more inflation, but Jerome Powell will be riding off in the sun by then. And then he also talks about the labor market when it comes to immigration. And those who understand immigration is the underground economy. They're the ones that keep things moving. But due to the machines, they're no longer needed. And remember, the crypto teacher told you. And of course, if the government is going to be passing out free money, you're definitely going to have to go. They're not going to allow you to get that universal basic income. And remember, the crypto teacher told you. And then we have inflation, 2% go, won't get hit until 2028. And Jerome Powell just admitted that to you. So that just lets you know inflation is not going anywhere. And we know by the time 2028 gets here, we'll be landed in this fourth industrial revolution, and that free money will be right around the corner. Don't forget it happens on Shemitah year. And remember, the crypto teacher told you. And we have the dollar is taking a beating. Did climb a little later on, but guys, remember, Trump has to devalue this dollar, so therefore he can devalue the debt. Don't forget the plan. It moves in phases. And then we have Lyft and Waymo have a partnership. Don't forget, Lyft had the technology to do driverless cars, but it sold it off. But when you're looking at Waymo, Amazon, Tesla, and all these other Robo taxis, don't forget they now have money and they can run themselves without a human involved. And remember, the crypto teacher told you. And then we have the main drama is coming. We have China on Nvidia. And I told you a long time ago this was going to happen. If you're part of the Patreons, put it in the newsletter if you're part of the stock Patreon. The fact is that we're definitely going to have a chip war, trade war, currency war. All of it's coming for WW3 because the two superpowers are definitely going to collide in order to get us over to this fourth industrial revolution. And remember, the crypto teacher told you because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, and little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.25 percentage point. Policies continue to evolve and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed.
The dollar index is the big mover on the session, and nobody's talked about it. The dollar index is down about a third to a quarter of a cent since the announcement. It's on pace for the lowest close going back to February of 22. And all things considered, I think you want to really pay attention to the 2-10 spread. It initially steepened, now it's back to 51. Without steepening, maybe we could trade a bit under 4%, although I'd bet against it.
After the company announces a partnership with Waymo, it will bring fully autonomous rides starting in Nashville. Joining us now, first on CNBC, is the company's CEO, David Richter. David, good to have you. You're starting in Nashville next year. Is that the first market of what you expect will be many in terms of this potential for the partnership with Waymo?
I mean, I hope so, obviously, but look, this is just getting started. So
Chinese authorities have told Chinese companies that they are no longer to use any chips or buy any chips from Nvidia. They're to cancel the orders that they have. It's probably because of the trade talks that are taking place right now. And, you know, we can only be in service of a market if a country wants us to be, pointing out that he's disappointed, but that there are larger items to work out on the agenda between the Chinese and the United States. What do you say to American companies that do business in China, do business internationally, and end up getting hurt on the bottom line as a result of what we're doing right now?
Well, it's not provocations from the United States that have started that. I mean, if China wants to, begin a trade war or, make these relations more complicated, it's their prerogative to do so. But we have to face China very seriously, and we do. The administration and the Congress understand that China has been working for a long time now to become a peer-to-peer adversary with the United States, and we're in a race with them, frankly, in so many areas, in AI and the advancement of new technology. And China is not a fair trading partner. I mean, they're a communist regime. They steal our intellectual property. They have no regard whatsoever for U.S. trademark law or any of the other provisions that make for fair trade agreements. So it is not the fault of the United States that there are these strained relations. It is the fault of China. And look, there are lots of complicated negotiations going on. We're concerned about their activities in the Indo-Pacific. We're concerned about the free countries in that part of the world and around the world. And our allies around the world share that same concern. So we're in a race with them. It's a very, I think, counterproductive development for what they've announced about Nvidia, and we've got to work through that.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Crypto Teacher and the new World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, The fourth industrial revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Joshua and Drama Team save New York from COVID stories 3. Part 3. King Joshua and Drama Team goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.